Hey, some of you guys get really frustrated when it comes to your bookkeeping, and bookkeeping is such an important part of your business. It is super important because everything that you get to decide, everything that you get to do performance-wise can be based off of how you've been tracking your activity financially for your business. And if you're not really doing this in a way, if you don't have a system in place to make sure that you have the truth in financial reporting for your business, then you're going to be at a disadvantage. Some of you are dealing with, let's face it, guys, this environment that we're in right now is super competitive. And whatever business that you're in, it's super competitive. Okay. And then we get to deal with all of the uncertainties about, well, what are the new policies for the government that are coming out that could possibly either enhance or restrict some of the things that you're looking to do as a business owner and as an individual in this country if you're in the U.S. Then there's uncertainty about the economy and where it's going to go, right? So there are some things that you're dealing with, and with you being a business owner, you get to bring it back to the certainties that are existent for you in life. It's certain the activity that you've done. It's certain that there's a pattern that exists inside of the activity that you've done. And there's certainty inside of the new actions that you can take to deliver new outcomes based on the trends that you have seen up until now. What has been working, and then what has not been working. How can you do more of what is working and less of what has not worked up until now? So your bookkeeping gives you direct access to that information internally. And of course, you know, the things that you will want to do compliance-wise, like payroll and making sure that you have asset protection, and then, you know, taxes and everything that you want to account for. And then, you know, certain arrangements that you may have, like with intercompany transactions and everything else that want to be accomplished. You would need to have solid bookkeeping in place in order to have those systems work for you on autopilot day in and day out. Okay. So yeah, bookkeeping is super important. If you are dealing with frustrations in this area, I get it. It's really hard to find good people that can support you in this. When you hire them on board, people do all kinds of crazy things that don't really match up with what you would expect your financials to look like. And, you know, you just want to know that what you're looking at makes sense for your business, and that you can make decisions from this, and that you could have peace of mind around compliance and everything that you're up to in your business. So yeah, it's super important to be able to have this in place. Okay. So how do you make sure that you have consistency and reliability inside of your bookkeeping? So right now we're looking at QuickBooks Online, a pretty popular platform that some business owners use in the world. All right. And it's pretty decent when it comes to the software around this area. Okay. And so many businesses like yours use QuickBooks as the source for all things financial related. Okay. But how do you make it work for you? How do you ensure that you're actually lining up the financial truth inside of your business so that you have some real decisions that you can make to get improved performance in what you're doing and have that peace of mind around what you're doing? First of all, you want to make sure that you have the complete reality reflected in terms of accounts that you're using for your business. And when I say accounts, it means it's a balance sheet equation: assets, liabilities, and equity. Okay. So your accounts are going to fall into those categories for your business. You want to understand, like, what category belongs to what framework. And when I say framework, what I mean is, okay, is it going to fall within an asset? Is it going to fall within a liability? Is it going to fall within equity? And what are we using in real life? If you have one checking account in real life, then you don't want to start putting in like 3 or 4 different checking accounts because you want to account for, you know, tax savings and, you know, marketing savings and everything else to overcomplicate your books as you're reporting them in your system that you're using to record your books. It wants to be the reflective truth. So when I say the reflective truth, if you have one checking account in real life, you want to have this checking account reflected in your books and nothing else. You at least want to have that reflected on your books. Then there are other things like you purchase a truck, or you purchase a piece of equipment, or you purchase some furniture, you purchase real estate through your business. Well, those are other accounts that we want to have show up on the books identically to how it shows up in your real life in your business. So if you have a bookkeeping team that you're working with, or if you have staff that you're working with that does your bookkeeping, or even if you're doing the bookkeeping, you want to make sure that that transaction, when you're purchasing something like that, a fixed asset, it matches up in real life. So yeah, there are, like, for example, if you're purchasing real estate, then you want to have that, the HUD statement, the settlement on your purchase for that property, and line by line what it costs you to gain that piece of real estate, because the cost is going to be the value of what shows up on the books. So you can see money comes from someplace. It came from maybe a loan, or it came from some down payment that you had cash on hand from your business, and the combination thereof paid for the purchase price plus whatever closing costs that you had, which amount to the original cost of that new asset. We call it new asset in the books, that piece of real estate, and that wants to show up on here. Okay. So it wants to, you want to see how your money's flowing that way distinctly. You want to have all the processes in place to make sure it's accurately reflected. Otherwise, you'll be looking at things and you'll be confused. You'll be stressed out. You'll be overwhelmed with the amount of workload that you have to do to clean things up. And then you're going to wonder whether or not if it's worth it at the end of the day to deliver, the end result that may not even be the truth anyway. Because either you don't know what you're doing, or you have people in your office that don't know what they're doing, and nobody has the accountability inside of their word to take the actions necessary to make sure your books are reflective of the absolute truth. You get to be the one to make sure that systems are in place so that your business is going to have the reflective financial truth, just like that. Okay. So what we're looking at here, hopefully that makes sense, guys. The outcome that you really want to achieve inside of this is to make sure you have clarity. You want to have peace of mind. And you want to have ease in the process as well. Okay, that's what we're looking to deliver here. And in order for you to deliver that, you want to understand the system. All right. So the system is, okay, when I have new accounts that I'm bringing on, I want to onboard these accounts into my books. If I have accounts, let's say you're just getting started with this, you want to take account of everything that you've been using for your business, nothing outside of your business either, because one of the things that you will typically see is, like, some people will be confused as terms of like what to put on and what not to put on in terms of accounts. Well, if it's related to this specific business, then you want to put it here. If it's not related to this specific business, then you don't. So if you have a personal account, you definitely don't want to put it on your business. Bookkeeping, to keep track of that, you want to have that completely off of the books. You only want the business checking account on the books. So you would need to have, for those of you who are watching this and you just really get started in business, you really do want to have a business checking account. And that business account wants to be the thing that's tracked in your bookkeeping. And if you have a credit card for the business and it's dedicated to business, then you want to track it on here. Okay, if you have a truck that you've contributed to the business, then you want to make sure that that's on here. If you have another piece of equipment that's contributed to the business for business purposes, you want to have that on here as well. Okay. And if you have another loan that's associated with the business, then you want to have that on here as well and keep that tracked and up to date. So if we're on here, and this is just a company that we took on and we got cleaned up to a large degree, so it looks pretty good, and there's some things that we wanted to address down the line to understand what good looks like on your books and what it doesn't look like on your books. For example, here, these are actually really good, strong reflections of what the reality is inside of this person's business. And, with the accounts that they have for that business, these are all accounts that they really have for the business. These are actually closely tracking the real balances in life, with exception of, floating transactions, which means that, they have some transactions that have not yet cleared the bank that we were recording on the books. That's what we want it to be. Okay. And then, down here, once we get to another section here, we have a section called uncategorized asset. We never want to see this have a number. Okay. Which means that the owner did something and there was no clear communication on what they did in terms of purchase that wants to be cleared up. Just like we said, we go out here and buy a piece of equipment or we buy something for the business, and we want to make sure that those transactions I had that example a little while ago about the HUD statement, the settlement statement on a piece of real estate. We want to have that form to see exactly where money was coming from and where it was going to, so that we have not this situation where it's uncategorized, but it has a distinct classification and categorization on the books as it is in real life. All right. So this video right now, I'm going to create another series of videos after this to show you exactly the things that you want to look out for when it comes to reporting the reflective truth, making sure that things in reality, that you're lining up on the books to things that are actually in reality, all right, line by line, so that you have reports that will be of value to you, because foundationally, we will need those reports in order to make some high-level decisions in your business. And we work with clients on the CFO level, and we get to lean in on the trends based on the truth in financial reporting, okay? And it's going to be super important that you have that for your own business, all right? So, yeah, we definitely don't want to see this section here of uncategorized assets or even uncategorized expenses on a profit and loss report. And then if we come down here, we'll see that we do have, furniture and fixtures, which was pretty much what was purchased in the beginning, and we don't have an update for depreciation per month here. Okay, so we see that depreciation is something that would happen each and every month and each and every year to reduce the amount of value on the books over time, because we expense that over time on the books. All right, so I'm seeing that even here we're not yet created all of the updates for that depreciation on automatic level. So that'll be the next action take here to see, okay, what's the true asset value? Why is that important? Because we look at key metrics like what's the return on assets? What's the return on fixed assets in the business? Because like if you don't have a really great return on those assets, we want to see that so that we can take new actions to improve that metric, because that metric is a key performance indicator in terms of how well your business is doing. Okay. But if I don't know that number, then I won't be able to address it and take actions to deliver and improve performance in this area so that the financial health of the business improves, right? To allow you to create more profitability and more equity in a more of a saleable business in the future, and also be clear on what that valuation is down the line. Okay. So it's important to have those metrics here so we can see it. Okay. But it's not here now. The next action for us is to ensure that these metrics get updated for depreciation. So that's one thing there. This is very simple. They don't deal a lot with payables and receivables in this company. They deal a lot with cash transactions, which is fantastic. They're not doing a whole lot of invoicing or paying out vendors on a 30-day basis or more. So this is really good to see that. This is pretty clean here. But then we have the bottom here, in terms of equity transactions and everything else. And we want to see the difference here, because now we can see that, they're taking draws each month from this business, about $3,000 a month for last month here. And, there are a couple of things that we do here with adjustments to retained earnings to ensure that we're tracking it throughout the year for what the company is doing each month in the year, and was not contaminated with prior years. So what I'm saying here is that we want to get the impact of this year versus every other year. So what I'm seeing here is a potential to shift a lot of this activity to the prior period, so that we can just get a distilled view of what's happening this year, month over month, with how this activity is impacting cash and everything else, because free cash flow is a big deal in terms of one of those other key performance indicators. And a lot of times free cash flow is impacted by this equity activity. So the financing portion of the business is financed from equity. So if I'm taking too much cash out of the business, where I could have improved free cash flow in the business as a management decision, it makes that business more saleable in terms of really reflecting, the strength of it in terms of cash flow. Okay. So again, guys, you can see a little bit of how important it is to have real clear processes for your bookkeeping, to have the reflective truth reporting in your books, so that you can be a strong business in a competitive market. You can have real clear actions where to go to, where to drive performance in the business. And I'll be talking more about that with the key performance indicators that we use once the reflective truth is showing up on the books for the specific people that we work with. All right, because now we all have an avenue, okay, to make sure that that business gets to the goal, the end in mind when it comes to that. Okay, hopefully this is a helpful framework for you to think. This really what I'm doing in this video is shifting your thinking, and when it comes to the importance of you keeping your books, because this is going to be like the foundation of everything that you get to do from here moving forward. Everything that you're working for can be shown and seen inside of this financial truth, this picture, when it comes to your bookkeeping. So don't shy away from it. Lean in is what I want to say. All right. My name is Cheston Bulgin, enrolled agent, your accounting superhero, fractional CFO, all of that down the line. And I'm hoping that you got value from this video. If you did get value from this, give me the thumbs up, and I'll see you in the next one. Take care. Bye.